start with you, Dr. Mazur. I think your comments were very thoughtful. I want to know, as a tax policy expert, is there a point at which, because you mentioned some of the tax incentives don't have the return on investment that some would say they do, but where is the point at which you have diminishing returns, and is there a point at which you tax either businesses or individuals where you get less revenue because you have reduced investment, growth, et cetera? Is there such an inflection point in your mind?
Well, for sure, you've heard of the Laffer Curve, right? You've seen that picture drawn. So surely at 100%, that's not giving you much incentive, right? And so as you move back a little bit from that, you are able to generate additional revenue. But where we're looking at in today's world, with tax rates of between 20, 30, 40%, that is not even close to where an inflection point occurs. We're really far away. I think when President Kennedy talked about cutting tax rates, maybe we were close to it then, but really we're not there now.
I don't have, I'm not an expert on tax policy, but I am on the tax subcommittee on Ways and Means, and I've pondered what is the right rate for many years now. And I'm not dogmatic. It's not theology for me. But practically speaking, you look at our competitors around the globe and you say to yourself, do we want to be the highest taxed business job creators in the world, or do we want to be the most competitive or somewhere in between? Because capital is going to flow in this global market to the most, to where it's going to get the best return. And I think about pre-TCJA and how much capital was overseas, and how uncompetitive we were from a tax code standpoint. So you touched on this, Mr. Pomerleau, about bringing us in line. Let's just say, nobody knows the magic rate, but we know our rates relative to our competitors. And you said that if we implement President Biden's tax rates that he proposes in his budget, number one, it's about almost $5 trillion in new taxes. But you said it would bring us to the top taxed corporate rate or business rate in the OECD field, with the exception of one country. Who's the one country that would be taxing higher than the United States in that scenario?
Actually, a small country, Colombia.
Colombia. Who's in the top 5 with the United States in that scenario where we would increase the corporate rates to 28%?
So the countries that would be up there with us would be some of the larger countries like Germany, France, Japan.
I read from a progressive, more liberal tax policy think tank where corporate rates, the majority of corporate rate increases are passed on to consumers. It's as high as 70%, that we can debate that, but are corporate rate increases passed to consumers in lower wages and higher prices, and to what extent does that dynamic occur?
Yeah, this is a complex issue, and it also depends on what the base of your tax looks like, how much it distorts investment, but it's generally true that any tax is going to fall on either workers or owners of companies, and a corporate tax is no exception. But the exact share really depends.
But
Go ahead, yeah.
But the Treasury Department and Joint Tax Committee who studied this basically show that 70 or 80% goes to capital.
Goes to what?
Capital, not labor, not consumers.
One reason for that, by the way, is because the base of the corporate tax has a lot of expensing, which makes the corporate tax more neutral and less distortive for corporate investment.
Mr. McBride, talked about the progressivity of the tax code, and many would say it's the most progressive of the OECD countries. Did the TCJA make the tax code less progressive or more progressive?
A couple of studies on this indicate that it was basically a wash, or made it slightly more progressive, actually.
Okay, so it wasn't less progressive.
No. Certainly they demonstrably, when CBO looked at it, there were tax cuts across the entire income scale.
And we've heard this tired talking point about it was a giveaway to the rich, but my understanding is that lower income and middle income folks benefited as a percentage more than the higher income in terms of retained income, retained earnings. Is that correct?
I believe that's correct, but I'm not entirely sure. I don't have the numbers in front of me here.
Well, my time's expired, and I yield to my ranking member for his Q&A.